Welcome. We just had one of the smaller regional Fed numbers came out. Chicago Fed National Activity Index. It looks like it came in down 4.19. I had to go all the way back to 1975 to see a number that's coming worse than this one. How big of a deal is this going to be? And I mean, I'd imagine, again, to start the week, many didn't expect to see anything really encouraging from some of this economic data, but it's just another brick on the pile of weight on the investors' shoulders, I guess.
Yeah, it's really just another data point, Ben, following the Philly Fed and all the other ones that we've seen here, and we continue to see these numbers and the manufacturing numbers lower and lower and lower, and numbers that we haven't seen in decades, and that's not going to change anytime soon.
So, Scott, are you surprised to see the indices coming off a little bit? It seems like their ability to shrug off some of the major job loss that we've seen. I mean, I've heard that basically we've wiped out now all of the jobs that we created throughout the 10-year recovery that we saw. I guess I'm wondering, is it now time for the indices to kind of face reality at this point? Because it seemed like for about 3 weeks, that first jobless number we got, we rallied into. Then we had the non-farm payrolls. A second weekly jobless number was Thursdays and Fridays kind of residual sort of effect, kind of more what you'd expect to see as reality kind of sets in?
I don't know if it's even residual, Ben. I would expect the same this Thursday and any the next couple weeks or so. I don't see how things are getting better at all until we do start getting back in reopening a little bit, which to me is not right around the corner. We may see pockets here and there, but it's not right around the corner.
So, Scott, what are you watching here in terms of this week? Because, again, it is going to be a little while before things start to get back to normal, before we start to return to work. I mean, in between now and then, with the focus being that just numbers are going to be dismal, is it a matter of, should we be looking to Asia to see if things have started to turn around there and if things have started to improve there? Or is it just a matter of wait and see, and ultimately the dust needs to settle first before we see what the damage has been done?
Listen, I don't think we can use any other area of the world as a barometer or a benchmark. Okay. I really don't. And in my opinion on that has quite changed a bit. A month ago, I would have said, okay, let's see what's going on in China. Let's see what's going on in other parts of the world that got hit weeks and maybe even, months before we did here. But now I don't want to say it's irrelevant, but I think that we have to just focus on what's happening here. And, the near-term news is unfortunately not very optimistic.
Yeah. Scott, one of the things we've been talking about this morning a lot is about how people like you are advising clients, their traders, to avoid and stay away from some of the volatility, some of the pitfalls associated with it at least. One of the things we've been talking about is options and how those provide traders with strategies to help them do just that. Are options something that you at Prosper Trading Academy advise clients to look into and to learn more about and to, well, as we've been talking about, use to diversify their portfolios?
Yeah, that is absolutely our sweet spot, Ben, and there's no question about it, especially in a time of volatility like this year. Options provide leverage. Options provide traders, investors, massive amount of leverage with limited risk. You can, people can trade options any strategy they want and have absolute limited or defined risk on any trade that they make. So whether someone is taking, let's call, a shot, meaning they're just looking for a massive move. They're not really doing a lot of analysis. They're not looking at the Greeks that are associated with options. They're taking a shot. Okay, take a shot. You can still have limited and defined risk. We don't teach that way. We teach very methodical, technical strategies that, quite frankly, in a period like this with high volatility, it's a great benefit. It really is.
Yeah, sounds like a more longer haul kind of approach towards trading is your methodology, not necessarily flash in the bucket or, as you mentioned, a roll the dice kind of approach that some people do use options for, that lottery ticket approach. Let's talk a little bit about this week, Scott, because we talked about how some of these smaller numbers, again, aren't necessarily the major focal point. You did mention how you expect some of the economic data to continue to come in disappointing. I noticed we have some durable goods orders. Other than that, it kind of looked like sort of a quiet week. Some housing data, some consumer confidence numbers, and it looked like some inflation data. What are you going to be dialed in on?
I'm going to be dialed in on earnings, and not so much to see how good or bad they are, but how the market reacts, because they're not going to be good.
Okay.
And most companies are going to pull back and probably not give proper guidance. And I really want to take a very, very deep, long look on the psychology of the market this week on how people react to earnings. And are they going to give companies a pass here? Are they going to get more concerned about what may happen over the next quarter, next 2 quarters? I think we are going to see some added volatility this week because of the massive amount of earnings that we're going to see. And I don't think investors, retail, whether it's professional or not, I don't think investors are really going to know and understand how to trade off of these earnings.